Brian Lenihan said the government is pressing for a substantial discount on 20 billion euros of unsecured senior bank bonds, a push that is being resisted by the European Central Bank. Jean-Claude Trichet, president of the ECB, said that Ireland needs to press ahead with its fiscal austerity, and imposing haircuts on investors is not part of the plan.
Right. The bond investors are to be made whole for committing acts of financial terrorism. The Irish government is in the pocket of the financial terrorists. I mean, imagine during the days of the IRA, for example, if Margaret Thatcher came out and was caught in bed with Bobby Sands. I mean, that would have been a scandal, right? Here you have the government of Ireland in bed with the bankers who committed these atrocious, these egregious acts of mayhem and wickedness. And they're all sitting around smoking a cigarette, having had a lolly-law good time, totally destroying the economy. It's unbelievable.
But the other thing is important to connect this to the Middle East, what's going on there. Democracy is not an option. The rulers of the world will not allow democracy there if they have their way. The same thing in the West. They will not allow capitalism to happen to the elite in the West. The same that they will not allow democracy to happen to the oligarchs of the Middle East. So you see that in Jean-Claude Trichet's statement there, that haircuts on investors isn't part of the plan. It is not part of the plan ever for the West. We will not allow bankers to suffer from capitalism.
Right. Capitalism would have both rewards and risks. And their version of capitalism is all reward for a few and no risk for a few, as all the rest of the society absorbs all of the risk. It's a kakistocracy in Ireland, ruled by the least qualified. The prefix, of course, caca, from the Latin and French merde. All right, so Stacey Herbert, thanks so much for being once again with us here on the Keiser Report.
Thank you, Max.
Don't go away, because when we come back, there's plenty more coming your way. Welcome back to the Keiser Report. Time now to go back to New York City and talk with Barry Ritholtz, money manager, author of Bailout Nation, and the man behind the extremely popular website, Ritholtz.com, also called The Big Picture. Barry Ritholtz, welcome back to the Keiser Report.
Thanks for having me, Max. It's always a pleasure to come by.
All right, let's start with what you wrote in the Washington Post recently. It says, why politics and investments don't mix. Talk to us about this.
I'm talking about economists and fund managers and traders who all allow their partisan political bias to affect their investing, and it turns out this operates for the worse. The two examples I used in 2003, after the Bush massive unfunded tax cuts, at the same time they were taking place, Greenspan had taken rates down to 1%, and all my pals on the left had said, this is going to be a giveaway to the rich, it's not going to create jobs, it's a budget buster, and all those things are true, but it's sort of like a surgeon going into the operating theater. You have to, hold all your biases to the side and be completely objective. If you look at the market back then, it was pretty clear this was an overwhelming amount of liquidity, and it was going to goose the market. The other side of that was 6 years later, March 09. Congress had waived the FASB 157 rules, which allowed banks at that point to then hide losses. They didn't have to report mark-to-market loans anymore. You had the market as oversold as it's ever been. The Fed had taken rates down to 0%. On average, when you see a down 55% market in such a short period of time, tends to mean that there's a big snapback rally coming. And when we discuss this with our colleagues and traders and friends, The guys on the right this time said, well, that Obama's he's a Muslim, he's a socialist, he's born in Kenya, he's going to destroy the market. In fact, the day of the market low, Michael Boskin had an editorial out in the Wall Street Journal saying Obama's going to absolutely destroy this market over the next couple of years. And as we know, the market's up almost 100% since then. So the idea was to tell people, hey, whatever your partisan politics might be, leave it in the voting booth. When it comes to voting, you have to think more objectively.
All right, well, this brings up the subject of self-interest and how this plays out in the markets. But my question to you, Barry, is that when you have a market, like we do in the States, that is dominated by exchanges that are increasingly becoming questioned in terms of their integrity themselves, the very market-making integrity of the free market capitalist system is coming under attack as people are questioning things like high-frequency trading, program trading, market manipulation. And so what about the market itself, Barry? It seems to be completely corrupt in that there is no price discovery anymore. It's all manipulation at this point. What about this, Barry? How are we going to solve this problem?
When you say the market's integrity is questioned, I disagree with you. I don't think there's any question at all. The markets were once nonprofit organizations run for the benefit of investors and the people that work there and actually traded there. And now it's a for-profit operation that basically is willing to sell their souls out to the highest bidder. So all these co-located servers that hedge funds are putting at the exchanges in order to get a millisecond advantage over everybody else, it gives them the ability to sniff orders before they go to the market, allows them to front-run investors. These guys are literally pulling billions and billions of dollars out, and that profit doesn't come out of thin air. That profit comes from the actual investing public who is forced to we have a fire alarm. The actual investing public is actually...
Keep going!
These people are stealing money from the investing public, and it's really a great tragedy. Blame Dick Grasso for causing this whole thing.
Barry, you're contradicting yourself. You started off by saying, we have no problem with these markets. Then you described to me a way of front-running on high-frequency trading that's stealing. So which is it? Are the markets corrupt?
Max, I'm not saying we have no problem. I'm saying you raised that as a question. I said it's beyond any doubt. There is no question. The markets have been corrupted. This is not an issue for debate. This is, the world isn't flat. Once they went to become for-profit entities, all bets were off, and the investor was thrown under the bus. So you and I are completely in agreement about this. I'm just saying this isn't a debate. There is no question the markets have corrupted themselves.
Let's move on to, we talked a little bit about earlier, I've just looked at the piece myself. You can fill me in on the details. What is going on with the bank dividends issue? Can you give us the broad strokes here and tell us what your thoughts are?
I'm astonished that given how subsidized the banks currently are and how much they're a notch away from life support, I'm amazed that anyone has the colossal cojones, for a lack of a better word, to say, hey, we should let the banks start issuing dividends. When you look at their actual state currently, they're artificially propped up in the United States with 0% interest rates. They were rescued from the brink of disaster with emergency taxpayer loans. We've allowed them to hide their losses, so what looks like profitable companies are in reality either insolvent or pretty close to insolvent. We've allowed the banks to turn the GSEs, Fannie and Freddie, into their dumping ground for bad mortgages. All the big banks and some of the mid-sized banks are taking mortgages that should be discounted 30, 40, 50% or more, and they're selling them for near par to Fannie and Freddie. So they're taking bad loans and dumping them off on the public. It's a classic example of privatized gains and socialized losses. Then you take the artificially steepened yield curve. It's hard for anyone with a straight face to say, yeah, these banks are in great financial health. They're standing on their own. There's no government subsidy. There's no taxpayer support. Let's allow them to write big dividends. The whole conceit is just based on a fantasy. These banks, in my opinion, should have been put through a prepackaged bankruptcy, should have come out of the bankruptcy with the bad debt sold off for pennies on the dollar, with taxpayers owning the bulk of them, and eventually spun out, recapitalized, and in better health. But we didn't go that route. We're allowing them to